The Magnificent Seven are breaking the stock market. Let's go ahead and break it down. Now, Magnificent Seven are the most powerful tech stocks out there. You know the names: Amazon, Alphabet, Meta, so on and so forth, right? But here's the thing. When we look at how well the S&P 500 is doing so far in 2023, and we compare that to Magnificent Seven, it ain't close. So I had to look at this stat twice. So Magnificent Seven in and of itself has gained 71% so far this year. Compared to the other 493 out of the S&P 500, the rest of the stocks have gained just 6. That's it. That's it. 71 for these 7 stocks compared to just 6% for the rest of the stock market. And again, that is 493 companies combined. Now, first, you might be thinking like, hey, wait, Kevin, just yesterday you told me how Nvidia was up 232%. You just told me how Meta was up 173%. The way that Goldman Sachs, these are the Goldman Sachs numbers, not mine, cited in Yahoo Finance, but the way they calculate this is based on the value of the company, market capitalization. So they're really kind of conjuring these numbers together to give us these figures. So let's get that out the way. But here's the thing. There's really several things to look at. Number one, remember we did a video about growth versus value. This is one of the reasons why I leaned towards growth. And again, I could argue that that's just a bias of mine of just when I grew up and started investing, these were the companies that were out there and they still here. Okay, so that is one way that you can look at it. Also, you know, it's just the way the market is, right? These 7 companies alone are really carrying the entire stock market on their back. And they're doing so because they have higher and faster sales growth than clearly the rest of the market. They also have better margins. And that is what makes tech stocks specifically so good. It's not to say that creating tech products is cheap. They're not, okay? They're not. But if I am creating a software that is usually a lot easier to maintain, a lot cheaper to maintain than creating, you know, a steel mill or even food, right? You have to grow the food, sell the food, but you only paying for so much, right? You're not necessarily subscribing to a food service. Like Blue Apron's not working, okay? It's not. But you guys get the point when it comes to, you know, a Netflix or an Apple TV or something like that. But that's the thing here. You have to have some money in the Magnificent Seven. You have to. Now, I would argue that most people already do, perhaps, but you have to, because they're gaining far too much for you to be missing out on that entire category. Now, thankfully for you, I did an entire ranking of which ones I thought were the best. You can just have them all. Obviously, you have an index fund. You likely do. But also, check this out. When we take just the top 10 most valuable companies, okay, not the Magnificent Seven, but the top 10 most valuable companies, and there is some overlap here, those companies together, okay, this top 10, they have gained 29%. Okay, now remember, there is some overlap here, but a company like United Healthcare is one of the most valuable companies in the US. They fall into that category. So even that top 10 is still overweight and gained 29% compared to wherever the rest of the stock market is. So while you don't want to necessarily duplicate, meaning I'm going to get my index fund and then just go back and buy all those stocks inside the index fund again, you do want to pay attention to tech. Now, obviously, you don't want to be what we call overweight, right? You don't want to say, let me just put 50% of my money in these 7 stocks. You would have made a lot of money. Okay, I'm not going to tell you that you wouldn't, but you remember, it's really about that risk versus reward. I want you to make as much money as possible, but I also want you to be safe as you're building your portfolio and investing for the future. Because this did not work in 2022. And last I checked, which is right now, we are very close to 2024, and we don't know what that theme is going to be. Every single year has a different theme. Okay, now it doesn't mean it starts on January 1. Okay, sometimes it starts later in the year, but whether it was stay-at-home stocks, whether it was crypto stocks or NFTs, or now AI stocks or defensive stocks in 2022, something is going to shift. Now we're moving to an election year. I would have to go back and do some research to see what stocks just generally do well during an election year, but as always, some black swan event, something I would argue random pops up that will change how we invest and what goes on. This year, we ran into how those banks collapsed. That was something that was unexpected, and it shifted how we were doing things. And the Fed was raising interest rates aggressively earlier this year, and then they stopped. right? They just kind of pause, and we'll see where that goes, how that affects the market moving forward. But it is something that did help the stock market grow. So we are going to see where that is going to go in 2024. I would argue, though, the Magnificent Seven, in some machination, in some combination, you should own a few, and you should continue buying and holding a few of them. Okay, now which ones of the 7, that's totally up to you. Now, I've already laid out my case. I invest more in Google than I do some of these others on the list. I have more faith in Google than some of these others on the list, but you guys know, especially on public, you know what I hold, right? And I'm looking at the list now. I don't think there's one I don't own. Yeah, so Apple, Tesla, Google, Microsoft, Meta. I don't own Meta. I'm sorry, I don't own Meta, Nvidia, and Amazon. So those are the Magnificent Seven. Sorry I didn't say that earlier, but that's the one I don't own. We'll see whether or not I get back into it. Probably not. And you saw where that was ranked if you watched yesterday's video. But that's the main point here. You gotta own some, I would argue. And these are probably stocks that you want to hold for the very long term, because it is unlikely for these companies to be usurped or taken over by some new competitor, especially as you can see how quickly they can adapt. When we were talking about AI this time last year, ChatGPT is just a year old, which is crazy to think about. No one was talking about Google being in that space and being a major player. They are now, right? When we first found out about ChatGPT this time last year, Microsoft wasn't a big player, and now they have partnered significantly with ChatGPT, and they've integrated it into some of their products. We don't know what is going to happen in 2024 or 25 or 26. I'm here to argue, though, that at least half of this list is going to have a big play into whatever that thing is going to be. And that is why you definitely want to have some of your portfolio in companies like this. But if you're trying to figure out, okay, great, I know the Magnificent Seven now, but which ones should I invest in? Which ones are the best? Then you want to make sure you go check out yesterday's video right here.